Welcome to Tesla Daily. Here's what's happening with Tesla. First up, Tesla's sales in China have dropped by a staggering 45%, even as exports are on the rise. In other news, the company is shifting its full self-driving feature to a subscription model. Meanwhile, the Model Y is still holding strong in California, keeping its sales lead despite facing some challenges. But it's not all smooth sailing. Tesla is dealing with trademark issues over the name Cybercab. On a brighter note, their energy business is seeing some growth, even as overall EV sales decline. And finally, there's been a leadership shakeup at Tesla, coinciding with these declining sales. That's the latest on Tesla. Stay tuned for more updates. Let's dive into some recent news about Tesla. First up, Tesla sales in China took a big hit, dropping 45% year-over-year in January. They sold just 18,485 units, the lowest since November 2022. This decline shows how much Tesla is relying on exports from its Shanghai factory. Local demand is slipping, partly due to stiff competition from Chinese automakers and changes in government incentives. While Tesla managed to export over 50,000 vehicles, up 71% from last year, the gap between domestic sales and exports is concerning. The Model Y, once a top seller, has fallen to 20th place in the market, overshadowed by the Xiaomi YU7 SUV, which sold nearly 38,000 units. This shift points to a bigger issue. Tesla's product lineup is getting old, struggling against newer competitive models. With tax incentives fading away and new purchase taxes coming in, demand is taking a hit. Analysts warn that if Tesla doesn't roll out new models or significantly upgrade existing ones, they might lose ground in China, where consumer preferences are changing fast. Next, let's talk about Tesla's shift to a subscription model for its full self-driving software. Starting February 14, 2026, they'll stop selling the software outright. Instead, customers will pay $99 a month. This could make it easier for new buyers, but might raise long-term costs for existing owners. The one-time price was $8,000, so over time, this subscription could add up. Tesla aims for 10 million active subscriptions to hit financial targets, but that's a tall order, with a current take rate of just 12%. This move could also affect resale values of vehicles with FSD, as future buyers may hesitate to pay a premium for a feature they can't own outright. The success of this change will hinge on how well Tesla communicates its value and manages customer expectations about future price hikes. Now, let's look at the Model Y in California. Despite protests against CEO Elon Musk, it was still the best-selling vehicle in the state in 2025, outpacing its closest competitor by over 50,000 units. However, sales have dipped year over year. The Model Y had 110,120 registrations in California, down from 132,636 in 2023. Overall, Tesla's sales in California fell from 238,589 to 179,656 during the same period. The end of the federal $7,500 EV tax credit has taken away a big incentive for buyers. Plus, the controversies surrounding Musk have affected consumer sentiment. As Tesla phases out its pricier Model S and Model X, the focus will shift to the more affordable Model Y and Model 3. But with sales declining, questions arise about Tesla's ability to maintain its market share in a competitive EV landscape. Next, there's some trademark drama over the Cybercab name. Tesla has a 30-day extension to oppose the trademark held by Unibev, pushing the deadline to March 14, 2026. This dispute comes at a crucial time as Tesla prepares for mass production of the Cybercab. They didn't file their trademark application before announcing the vehicle at a 2024 event, allowing Unibev to secure it first. As production gears up for April 2026, Tesla needs to either negotiate with Unibev or risk losing the name. Alternatives like Cybercar and Cybervehicle have their own trademark hurdles. This situation highlights Tesla's struggles with brand identity in a competitive market. The outcome could impact their marketing strategy and product launch timeline, which might shake investor confidence. Now, let's shift gears to Tesla's energy business. It's actually seeing growth, with energy storage deployed up 49% year over year to 46.7 gigawatt hours. This segment brought in about $12.8 billion in revenue, showing that Tesla's investments in solar and battery tech are starting to pay off. While the automotive side faced a 3% revenue drop, this growth in energy could be a lifeline as they navigate rising interest rates and stiff competition. Finally, Tesla is shaking up its leadership. Joe Ward has been appointed as the global head of sales. This change comes as the company faces declining sales, especially in Europe, where registrations dropped over 42% in January. The competition from Chinese manufacturers and traditional automakers is heating up. Ward's appointment signals a shift towards consolidating leadership to improve sales execution. But with ongoing turnover among senior executives, there are concerns about stability. As Tesla focuses on energy and autonomous vehicle ambitions, the success of this leadership change will be crucial in tackling the challenges ahead. That's the latest on Tesla. A lot happening, and we'll keep an eye on how it all unfolds. And that's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a reminder, this is for informational purposes only, not financial advice. Catch you in the next update.